In 2024, the government took the winter fuel payment away from millions of pensioners. In 2025, they brought it back, but with a catch. And from April 2026, just a few months before this video, HMRC quietly started taking the winter fuel payment back from around 2.2 million UK pensioners through their tax codes, mostly without them realizing it was happening. If you received the winter fuel payment last winter and your individual taxable income for the 2025 to 2026 tax year was over £35,000, HMRC is taking that payment back, about £17 extra in tax, deducted from your pension every month for the whole tax year. Almost everyone affected is finding out about this only when they look carefully at the new tax code letter HMRC sent them in spring. But here's the part nobody's explaining clearly. The way the rule actually works, two pensioners in the same household can be treated completely differently, even if they share the same kitchen, the same bills, the same everything. And there is one simple thing, worth even £1 a week, that protects you from the clawback entirely. Most people who'd benefit from it don't realize it exists, even though it's the same benefit we've talked about all the way through this series. Stay with me, because two things decide whether the winter fuel payment in your bank account is real money or just a sum HMRC is preparing to take back. The first is what I call the couple's trap, a rule about individual income that almost every newspaper article gets wrong, and that's costing households real money in unnecessary opt-outs. The second is the pension credit shield, one of the most valuable lessons in this entire series. Okay, let's go back to the basics. The winter fuel payment is an annual tax-free payment for people over state pension age, designed to help with heating costs in winter. The amount depends on your household. For the 2025 to 2026 winter, the standard payment was £200. If someone in your household was 80 or over, the payment was £300. If two pensioners in the same household both qualified, the payment was usually split between them, but the total per household didn't change. For most people, it's entirely automatic. You don't apply. You don't fill in a form. If you receive the state pension or another qualifying benefit, the DWP already has your details, and the payment lands in your bank account in November or December. A small number of people do have to make a claim. For example, if you've recently reached state pension age and aren't yet receiving the state pension, or if you've recently moved back to the UK and aren't on the DWP's records. To qualify, you needed to be over state pension age during what's called the qualifying week. For the 2025 to 2026 winter, that was the 15th to the 21st of September, 2025. The qualifying week for the next winter, 2026 to 2027, will be a similar week in September, 2026. So far, so simple. Now, the catch. From the 2025 to 2026 tax year onwards, the winter fuel payment is subject to what HMRC calls the winter fuel payment charge. Here's how it works. If your total individual taxable income for the tax year is over £35,000, HMRC takes back the entire winter fuel payment through your tax, the whole payment, not a portion of it. This is what's called a cliff edge. If your taxable income is exactly £35,000, you keep the payment in full. If your taxable income is £35,001, just £1 over Dean, HMRC reclaims the whole thing. The Treasury estimates around 2.2 million pensioners across the UK are affected. And here's the part most articles get wrong. The £35,000 threshold is per individual, not per household, not combined. This is the rule I called the couple's trap, because most people misread it. Let me make it concrete. using the example that appears in published tax guidance from the Low Incomes Tax Reform Group. They call the couple Lucy and Stan. Lucy and Stan are married, both over state pension age. Both received a winter fuel payment last winter. Lucy has a state pension, plus a private pension, plus a bit of income from a rental property. Her total taxable income for 2025 to 2026 was £36,600. Stan has just his state pension and a small workplace pension. His total taxable income was £14,500. Now, what most people assume is that the household income is what matters. Wrong. Each person is assessed individually. So Lucy, at $36,600, is over the threshold. HMRC reclaims her winter fuel payment. Stan, at $14,500, is comfortably under. He keeps his winter fuel payment in full. Same house, same bills, same kitchen, different outcomes. Why does this matter so much? Because of one really common, really expensive mistake. Couples who think their combined income puts them over the limit often opt out of receiving the payment for both of them. That's wrong. If only one of you is over the threshold, the other one is still entitled to their share, tax-free. Never opt out on behalf of a low-earning partner. Each of you decides for yourself. Okay, quick clarification, because this comes up a lot. What counts as taxable income? It includes your state pension. That surprises many people. The state pension is taxable income, even though tax usually isn't deducted from it directly. It includes private pensions, workplace pensions, any earnings if you still work, taxable interest above your personal savings allowance, and rental income. It does not include income from an ISA, that's tax-free, and ISAs are protected. It does not include attendance allowance, PIP, or DLA. Those disability benefits are tax-free too, and it does not include the winter fuel payment itself. If you're not sure where you stand, HMRC has built a calculator on gov.uk specifically for this. Search for Winter Fuel Payment Calculator on gov.uk, put your figures in, and it will tell you exactly how the recovery will work for you. Now, the second open loop I planted at the start, the pension credit shield. If you receive pension credit during the qualifying week, you are completely exempt from the winter fuel payment clawback, no matter what your other income is. That sounds like a contradiction, because pension credit is for people on low incomes. But it's not a contradiction at all, because, as we showed all the way back in our first video, being entitled to pension credit isn't always obvious. The thresholds are deceptive. There are hidden additions for severe disability and for being a carer that quietly lift the income line. And the savings myth keeps thousands of people from claiming, even when they would qualify. If you are entitled to even £1 a week of pension credit, you are protected from the winter fuel payment clawback. The same is true if you receive universal credit, income-related employment and support allowance, income-based job seekers allowance, or income support during the qualifying week. So think about who really benefits from making sure that pension credit claim goes in. It's not only the obvious group, the people on very low fixed incomes, it's also pensioners whose income is bouncing around the $35,000 line because of a private pension, or some rental income, or a bit of part-time work, and who could shield themselves from the clawback by being entitled to even a small pension credit award. This is one of the most powerful examples in this whole series of why pension credit is the keystone benefit. A claim worth a few pounds a week can be worth £200 or $300 on its own through the winter fuel payment alone. Every single winter. Forever. Right. Now, how the clawback actually happens. If you're already in the self-assessment system, meaning you complete a tax return every year, the winter fuel payment is added to your tax bill for the year you received it. For the 2025 winter payment, that's your 2025 to 2026 return. due online by the 31st of January 2027 or on paper by the 31st of October 2026. HMRC will, where possible, pre-populate the figure on your online return. Check it's there. If it's not, you need to add it yourself in box 1 of page TR5. If you're not in self-assessment, and most pensioners aren't, HMRC adjusts your PAYE tax code for the following tax year. So the 2025 winter payment is being clawed back through your 2026 to 2027 tax code, which is the tax code that started in April 2026. This is what most pensioners are starting to notice now. The amount works out at about £17 extra in tax per month for a typical £200 payment over 12 months. The total over the year matches the amount of the payment you received. And here's one detail nobody's flagging clearly enough. The 2027 to 2028 tax year will see a double recovery. Why? Because HMRC will be recovering the 2026 winter payment and the 2025 winter payment in the same tax year. That means the monthly deduction will roughly double to around £33 extra tax per month. If you're affected, brace for that letter when it arrives in spring 2027. This isn't a mistake. It's a one-off catch-up, but it will look alarming if you're not expecting it. Now, opting out. If you know your income is reliably going to be over £35,000 and you'd rather not deal with the tax adjustment at all, you can choose to opt out of receiving the winter fuel payment in the first place. Financially, it makes no difference. Opting out or receiving the payment and having it clawed back both leave you in exactly the same net position. The only reason to opt out is convenience. For people in England, Wales, and Northern Ireland, the DWP launched an online opt-out form on gov.uk from the 1st of April 2026. You can opt out for the upcoming winter and for future winters. You can opt back in later if your income drops. For people in Scotland, the equivalent payment is called the Pension Age Winter Heating Payment, and the clawback rules are exactly the same. To opt out, contact Social Security Scotland directly by phone. And whatever you do, do not opt out on behalf of a partner with lower income than yours. They are entitled to their share, and they will not be clawed back. Each person decides for themselves. One quick protection before we finish, because the change in the rules has triggered a wave of scams. HMRC has explicitly warned that fraudsters are impersonating them around the winter fuel payment clawback. The rule is simple. The real HMRC will never text you, will never email you, asking for payment to settle or release your winter fuel payment. They will not call you out of the blue asking for bank details. They will not threaten you with arrest. Any clawback happens silently through your tax code or your self-assessment return. There is nothing for you to pay separately, ever. If you get a suspicious text, forward it to 7726 dial. That's the standard scam reporting number for SMS in the UK. If you get a suspicious email, forward it to phishing@hmrc.gov.uk. Delete the message. Don't engage. So, 2 things to do. First, if you've received a tax code letter from HMRC in spring 2026 and you can't quite work out the adjustment, this is probably what it is. Look for a reference to the winter fuel payment recovery on the letter. If your taxable income for 2025 to 2026 was over £35,000, that's the cause. If you're sure your income is below FU, call HMRC on 0300 200 3300 and ask them to explain it. Errors happen, and they can be corrected. Second, and this is becoming the recurring theme of this whole series, check pension credit. If you're anywhere near the line, apply. The Pension Credit Shield protects you from the winter fuel payment clawback. It protects you from energy bill shock. It opens up council tax help, NHS dental, the warm home discount, and a free TV license at 75. All of that from one claim. The number is 0800-991-234. The full walkthrough is video 1 on this channel. Now, about that council tax. We've mentioned several times in this series that pension credit unlocks council tax help, and for many pensioners, that can mean up to 100% off the bill. But here's what most people don't realize. There's another, completely separate set of rules that can cut your council tax, even if you're not on pension credit, including a 50% discount that thousands of pensioners qualify for and never claim because of one specific condition they live with and don't realize the council recognizes. That's the next video. The council tax discounts hiding in plain sight, and how to find out if you're already paying too much. Subscribe so it lands in front of you, because every April these rules change, and the people who stay informed are the ones who don't get left behind. This channel is for general information only. We are not affiliated with the DWP, HMRC, or any government body, and nothing here is personal financial advice. All figures are current at the time of recording and can change, so always confirm your own situation at gov.uk or with a free advisor such as Citizens Advice or Age UK.